Stocks are fluctuating on concern that the economic recovery may not justify a 6-month rally. Larry Adam is Chief Investment Strategist at Deutsche Bank Private Wealth Management, and he says the outlook for the market hinges on earnings. He joins us now from Baltimore with more on his perspective. Welcome to you, Larry.
Hi, Lori. How are you?
Very well, thank you. So do we really have to wait for third-quarter earnings here to get some firm direction from the market?
I do. So far, what you've seen is a pretty significant rally, most significant one that we've had in the post-World War II era. And I think when you look forward at the economic recovery that we're going to have, it's going to be much more muted than what you've historically had. So to take this much higher from where we are right now, I think you're going to have to see significant improvement in the economic data, which I don't really think you'll see, or you're going to have to it's going to be based on earnings, and I think it's going to be based on earnings, so you're going to have to see those move higher.
So it sounds like you're comfortable with this pullback, that it's healthy.
I do. I do think it's healthy. I think it'll pull back. That'll give people the opportunity to get in at better prices because we have gone too far too fast. And the reason I say it's healthy is because I'd rather see a 5 or 10% pullback now than see this market go up higher and then see it ultimately pull back, 20, 25%, because I think people have been scarred since we've had these types of pullbacks twice in this last decade, the tech bubble, the credit bubble, and that would have them, maybe causing a more significant pullback just because of the overshoot to the downside.
So what do we have to see in terms of third-quarter earnings to give a firm push up to the stock market?
Well, I think the big theme during this previous quarter was the word stabilization, and I think that that's appropriate with what the Fed has suggested about a leveling out in the economy. I think if you start to hear the words improvement in conditions, I think that will be what ultimately sets up the market to move higher, because the visibility will be clear as we do move into 2010.
But Larry, you're still looking for the S&P to close, S&P 500 to close by 10:30, by at least the end of the year. What's giving you some insight into that? What are the numbers telling you?
Well, again, we base our numbers on what we can perceive as fair value, and that's what we look at when we have our numbers, our earnings forecast for this year of 58.60. When you look relative to the fixed income markets, how they've rallied, that's an appropriate number for the S&P 500. So that's what we're looking for. Now, I would add that next year our number is 1,200. And I think that that's based on a pretty significant uptick in earnings growth. We're looking for earnings growth in excess of 20% next year. And I think that that'll be very positive for the equity markets.
And what in the economic climate is giving you a sense that earnings growth is going to jump like that in 2010?
Well, I think you're starting to see some signs from some of the data that's coming out right now. You've seen a pretty significant uptick in the ISM numbers. I think housing, while maybe it hasn't bottomed, from a pricing perspective, I think from an activity level, you're seeing better numbers coming in from that, so that'll help support that. When you talk about specific earnings numbers, you got to look at the commodity sectors as well, and I think commodity prices will move higher, and that will help those particular sectors, energy and materials. And then finally, I think some of the areas such as tech will benefit from the upgrading of some of the software systems out there. For example, Windows 7 coming out in October.
So Microsoft is something you would advise buying?
Well, I don't do individual securities, but I would say that from our surveys that we've done with chief technology officers, this could be a much bigger upgrade cycle than what you've seen in previous upgrade cycles. But I think the more important thing is that it broadens out to storage, to hardware, to video capabilities. So I think it could be an ultimate boost for the entire sector.
And we're showing, I don't know if you can see this, but the performance 1 year of some of the industries you told us before the interview that you like, information technology, which we're talking about, along with healthcare, the S&P Industrials Index, as well as energy, all of those in the red for the year. So you must see some value here, especially with the industrials, down some 30% over the last year.
Now, we do like industrials, and more specifically, I think this is a market where you need to be extremely selective even within the individual sectors. And one area we continue to like is the transportation, in particular the railroads, because if, in fact, we're having an inventory restocking type of environment, you're going to need to transport those things around to build this inventory. So that's a positive. And transports tend to be very economically sensitive. So if, in fact, GDP growth does turn positive, and our forecast is 3.2% for 2010, that would be very positive for that sector in particular.
Larry, your firm is one of the lowest estimates for tomorrow's unemployment report, 150,000. Why?
Well, we've seen significant improvement. We've gone from about almost 700,000 jobs lost on average during the first quarter. a little over 400,000 during the second quarter. And you're starting to see some signs in a lot of these different surveys that are coming out. For example, the ISM surveys. You're starting to see more people respond to those surveys that jobs are becoming more plentiful. So again, our official estimate's 150,000. I think you're going to have to see a number around that to actually see the markets move higher, because I do think if you see anything above the 250 to 230, which is currently consensus, I actually think the market sells off on that tomorrow.
So you think this will be a significant market mover?
I do. If you get anything above that consensus at 250, because I think the market, while the consensus is 230, I actually do think that the whisper number is probably lower than that.
All right. Our thanks to Larry Adam of Deutsche Bank Private Wealth Management for being our guest today. Have a nice afternoon.
Thank you.